So welcome everyone. आज मेरे साथ हैं अमित सर and we are going to discuss a very interesting theme which is manufacturing. It has been a buzzword for quite a while now. I think right from the very beginning we have been studying that India had skipped a phase of manufacturing and that we must get on it. And now it seems like we are catching up on that opportunity as well. So I'll get right to the meat of the topic, sir. Let's discuss manufacturing as a theme first. What is happening here?
Yeah, so if you see manufacturing as a theme, I think the way things are evolving is that see in next few years, uh, India is going to become 2.5x uh, because of the certain size and scale that we have reached in next 10 years at a normal run rate of growth, we will add 2.5x to our GDP. However, we believe that at the stage at which we are, it will be manufacturing which will drive that incremental growth, and as a result, uh, manufacturing will, which is 14% of GDP today, will end up becoming 21%, which means that while GDP will become 2.5x, manufacturing as a component will become 3.6x, which means that companies in this space will manage to grow faster. However, having said that, one important thing to understand about manufacturing as a theme, and you mentioned, briefly that India has skipped this theme earlier, uh, which also means that effectively for India, manufacturing is actually a theme of turnaround. Why? Because in the past, manufacturing has not managed to grow faster than GDP. It's only in last 1 year that it has managed to grow fast, and on a real basis, it is now growing faster than GDP. So the point is that something that has not done well historically has shown some signs of starting to do well and is expected to do well in future. That is nothing but turnaround. So I think that is how we are approaching this theme.
Absolutely, sir. So my next question is, like you mentioned so beautifully in these great statistics, what has changed actually that we are witnessing this turnaround?
So I think in last 2 3 years, India is now emerging as a preferred destination for manufacturing, which was not the case in the past. In the past, entrepreneurs in India, they prefer to import rather than do manufacturing, and there were various reasons. However, in last 2 3 years, some of their reasons have changed. So one of the primary reason why India is emerging as a preferred manufacturing destination is that today, if you set up a manufacturing plant in India, you are getting exposed to a very large opportunity. If you see, India is one of the world's largest consumption market, data on the left hand side, but India is also one of the fastest growing consumption markets, which means that anywhere you are in the world, you will get attracted towards one of the world's largest market as well as one of the fastest growing market. Not only that, historically, India's growth has generally, been about services, and even in exports, there is IT services which forms a major component. However, in last few years, uh, goods exports out of India has started to go up, which means that today, if somebody is setting up a manufacturing plant in India, he will participate not only India's large and fastest growing domestic market, but he can also participate in India's rising exports. So I think the base change that has happened is that today people are realizing India's potential. So I think that is one. Second is that uh, even if you think from a competitive advantage perspective, see historically, take for example, these are like four factors of production: land, labor, capital, and entrepreneur. And we have also added energy, saying that in a modern era, this is an important factor of production. So one of the key factors of production, land. Now, historically, land acquisition in India used to be very difficult. In fact, post '09, some of the projects that were launched by 15, 16, they all had to be shelved finally because, land acquisition could not happen. I mean, one of the, you know, uh, I would say examples that always comes in our memories, Tata Motors, plant in West Bengal, right? Finally, just because they could not acquire land, they had to shell that project completely, right? So many examples were there. So I think land acquisition was very, very difficult. Uh, in last few years, two things have changed. One is that land records are now being digitized. Second is that there are centralized agencies which have been set up. So today, if somebody wants to, set up a manufacturing plant, he can get assistance from some of these agencies, and the process has become as simple as these officials taking you to, one room, and then they showing you satellite image on a PPT, and you can decide. So I think that process itself has gone a drastic change. Second is in terms of labor cost. That potential was always there. India is having one of the largest labor pools in the world, and it's also one of the cheapest. So immediately it gives you some cost advantage when it comes to labor cost. Even in terms of energy cost, see, incrementally world is now moving towards solar and wind. And if that is becoming the key incremental source of energy, then actually India's costs are quite competitive. So something, where we were not very competitive in the past, suddenly now we have become very competitive because the source of energy is changing. Capital. Now that is also an important requirement for, setting up large mega projects. Today, equity markets generally have been far more generous, sometimes more generous than our comfort. So for anybody to raise equity capital for a good project in hand should not be very difficult. And if you see data on the right hand side, I think this is where, benefit of India's top strong macros are now becoming visible. India's cost of fund versus country like US, which is a developed nation, used to be 5% in the past, which is now down by almost 200 bips. And this has happened before, this has happened before India's inclusion in bond index. This has happened before latest budget, where a country with already strong macro tried to further strengthen its macro by bringing down fiscal deficit further. And lastly, there is no, dearth of entrepreneurial talent in India. So we can see that, private promoters stake in in companies is one of the highest in the world, and India has third largest startup ecosystem. Startups are far more riskier than even manufacturing. So the point is that today, there is a decent opportunity available. Uh, there is there is there is a improvement in competitive advantage that one can have. And lastly, I think government initiatives and reforms have also played a huge role. I think one of the biggest challenge that India has faced historically with manufacturing is that projects in the initial years are not viable. It's difficult to make money, and if it is difficult to make money in the initial year, generally nobody will be interested because nobody is willing to suffer losses upfront. And that is where exactly I think government has played a huge role. This entire PLI scheme, it gets discussed a lot, but purely from a top-down perspective, if you see what is PLI scheme, PLI scheme is nothing but a capital subsidy. It's a way through which you are inviting promoters to set up manufacturing projects in India, but then you are saying that in return, we will give you some bit of capital back. So it's like balance sheet support. Uh, in schemes like semiconductor, so in sectors like semiconductor, along with center, state gives additional support. So today, if you in some of the plants, if you set up 100 rupees, you get 70 rupees back. 40 rupees is given by state, and 30 is by, 40 by center, and 30 by state. So effectively, 70 rupees you are getting back. That's a huge capital subsidy. And suddenly the project IRR then changes meaningfully, right? Because earlier it was something divided by 100, now it is something divided by 30. That numerator does not change, denominator has gone down. Not only that, you are providing a huge taxation benefit also. Today, if you as an individual, your marginal rate of tax is 42.5. For corporate, it is 26, right? It's very, very low as compared to an individual. So the point is that it's a huge PNL subsidy. Government is also, spend meaningfully on infra. Why? Because they wanted to boost productivity. So, this was the first budget of Modi government, and this was the latest budget. The incremental amount that was announced for railways is up 8x. For roads, it is up 16x. For ports, it is up 4x. Now, this allows you to build, large mega projects. Today, when we talk about roads, we talk about expressways. We no longer talk about, golden quadrilateral or extension of, four laning to six laning and all. That has already now been done. Now we are talking about, expressways, which are far, far more productive. They were very expensive. That's why we never could build them in the past. Now we are able to do that. So entire infrastructure ecosystem is changing. Lastly, government is also signing a lot of FTAs. Not many people are aware, but India is one of the largest signatories to FTAs. Every FTA that you sign, free trade agreement, that actually ends up increasing your total market, total addressable market, because you can now export to one more country at a preferential rate of duty. So effectively, it's everything has come together. Your opportunity is large, your competitive advantage has been increasing, and on top of that, there is a huge government push. I think all these things are, ensuring that there is a huge change as far as this sector is concerned. And that's what, turnaround requires, right? Turnaround requires one catalyst. And I think all these three things are acting as a catalyst.
Right, sir. Right, absolutely. Sir, my next question is about how long this vision is going to last for us. Is it a quick cycle that we're going to see quick in and quick out, and that we are going to, which doesn't look like, because I think infrastructure projects do take a lot of time. So, if people want to get into this opportunity, what is the time horizon?
Issue, I lost you in between. I think you are asking that if somebody wants to get into this opportunity, what is the time
Okay.
horizon that he should be looking at? Right? That's the question.
Yes. Yes, sir.
Okay. Yeah. So, see, effectively, if you see, you know, we think that the stage at which, manufacturing is in India today, where, infra was in 2003. India needed infra, but India did not have sufficient capital. That's why private sector was, invited to invest into infra. That is the time when public-private partnership term became very popular. If you see something that we needed, we have kept on investing. As a government, government has always kept on focusing on infra. From 2003 onwards, successive government changes have happened, but need for infra was always there because we were far behind. And to that extent, the opportunity size for India was large, and that's why infra capex has continued. Only thing is that in 2003 to 2009, infra capex was led by both government as well as private sector. This time around, 2020, 22, 23 onwards, entire private sector capex is actually happening in manufacturing. Government is doing heavy lifting on infra. And talking about size of the opportunity, see today manufacturing is 14% of GDP. India imports 12.8% of GDP, that is $450 billion of goods, ex oil, ex gold, every year. That is another 12.8% of GDP almost now, which means that even if domestic demand does not grow, even if we do not, manage to do any incremental exports, purely by substituting imports, you can add, another 12% to manufacturing, which means that the sector size can effectively almost be 70-80% higher than what it is today, purely by focusing on import substitution. Point that I was trying to highlight is that the stage at which we are is that we are just at the beginning of the cycle. Why? Because you are just starting to get global capital into manufacturing. You have been one of the biggest beneficiaries of shift in global supply chains. So in last 4 years, total 129 companies decided to move their supply bases. Out of the 28 have decided to come to India, which means that India has benefited. And your share of manufacturing in capital formation, which means that the share of manufacturing capex has started to go up. So generally, you are at a stage where capex in this sector is now started to happen. And once capex is done, then top line follows, right? And that is why we are confident that this is a long term theme. I mean, this is not something that that is there for 1 or 2 years and then should not see, because it's with great difficulty that you have started to get foot in the door. I mean, current government has been saying make in India for a long time, from 2013-14 onwards. It's only that post COVID people have started listening to what you're trying to say.
Yeah.
And second thing is that this entire theme is actually India's need. Why? Because why is manufacturing important for India's long-term growth? Just like India needed infra, India now needs manufacturing to do well. Why? Because India is fifth largest economy in the world, but it ranks 141 out of 187 in terms of per capita. That is very, very poor. I mean, India is a large nation, but not a prosperous one. And data shows that there is a strong inverse correlationship between, percentage of population which is employed in agriculture and your per capita. Why is that? Because GDP per employee in agriculture is 1,65,000 rupees. In manufacturing, it is 5,22,000. So something which is more productive will definitely pay more.
Right.
So India has this huge burden where you need to shift some portion of your population on agri to something else. And that something else now can only be manufacturing, because services is already large in India. So services already absorbs a large portion of your population.
Yeah.
Post that, you have such a large burden. So the point is that if you want to be prosperous, then manufacturing will play a key role. And when we talk about, Viksit Bharat, when we talk about, India's rise to prosperity, this is going to play a very important role and something that is very important for the country. Then why? I mean, it should continue for very long. No? It should continue irrespective of government changes. It should continue irrespective of anything. Why? Because this is something that is needed. It is just like infra was needed in 2003. 2024 also, we are still talking about infra.
Yeah.
That just tells you that, cycles can be longer. So I would say that investors can take a long-term view here because the theme can, last longer.
Right, right. Absolutely, sir. Sir, let's get to the actual thing that we are seeing here. Invesco Mutual Fund, how do you plan to play this opportunity for the retailers and what is it in for them?
Sure. So if you see, today, this is our investment framework. Uh, as a house, Invesco, one area of differentiation that Invesco brings to the table is that entire stock selection. We have a stock categorization process. So the entire stock selection framework is, process oriented. Uh, uh, every company that we invest into has to necessarily be categorized by the analyst. Only after it is categorized, only then the fund manager can invest, which means that the entire due diligence process happens before investing. And that is something unique that I would say about us. We cannot buy companies based on our whims and fancies. Fund managers cannot just buy on their own. They need to buy only categorized companies. So that way it brings a lot of discipline. Now today we have 269 companies which are categorized. Out of that, 146 are eligible for this fund. However, we arrived at this 146. These are companies which make use of plant and machinery to generate top line. Now, out of that, we'll create a portfolio around 50 odd names. We already have model portfolio in place. Uh, So what we have done is this universe is divided into two sectors. These left hand side, if you see, these are all traditional sectors of manufacturing. These are all companies where, these are all evolved sectors. These are companies which have become large over a period of time. So auto, pharma, textile, capital goods, consumer durables, these are all traditional sectors of manufacturing. On right hand side, new age sectors like auto, EV, battery, semiconductor, electronics, renewables, these are all new age sectors. Now, within this, our preference is going to be three type of companies. First, companies which are globally competitive. These are companies which have large global operations. They have managed to do well in last 7 8 years, despite India not doing well in manufacturing, which just tells you that these companies have some unique competitive advantage, which has enabled them to grow faster. And if they manage to do well when India has not done well in manufacturing, there is no reason why they cannot continue to do better if India does well. And that's why for us that becomes a core of our portfolio. Almost 33% of exposure will be to these kind of businesses. Uh, Additional, 12 odd percent exposure is towards companies which have access to technology. Here, uh, these are largely MNCs. These are basically, subsidiaries of MNCs. Because these companies are global in nature, they have access to best technology, and these companies have access to those kind of technology by paying some royalty. Uh, Third is, having tailwinds. Now, the biggest tailwind that companies in this space are enjoying is through import substitution opportunity. Uh, and The second is gaining market share from unorganized to organized. So that will be another 50 odd percent of the portfolio. And I told you that import substitution is a mega theme. I mean, it's one of the biggest drivers of this theme. So that's how the portfolio will be constructed. Now, if you see one more data point, see this is one more reason why investors can consider this fund from a long-term perspective is that this is a more broad-based, diversified fund. It is not a sectoral fund, except for financial services, IT services, real estate, and utilities. Fund manager can actually invest in all sectors, which means that if one sector goes out of favor, we can very well invest in something else. And to that extent, this is going to be a diversified fund across various sectors. And lastly, if you see the universe basically has only 33 large caps and 65 small caps. Why is that? Because uh, historically India has not done well in manufacturing, so you have not created mega caps. uh, which means that this is like a virgin opportunity. A lot of companies are young in their life cycle. It's like, you are staring at a very large opportunity size, but the companies in the space are very young, which means that if you capitalize on them on today, then, you can grow, you can compound very fast over a period of time. And I think that's what the, attempt is in terms of creating a portfolio for investors.
Right, absolutely, sir. This sounds really exciting, sir. It looks like a great opportunity great secret sauce to generating wealth. Before we conclude, I would request you if you could give us, a concluding summary of it all, key takeaways from what we discussed today. That would be very helpful for everyone, I think.
Yeah, so effectively, what we are trying to say is that, see, anybody who is looking at this theme, he is actually at a beginning. This theme is at a beginning of its life cycle. We are at a stage where, once again, infra was in 2003, which means that we have best 20 years ahead rather than best 20 years behind. Companies in this space, will enjoy very high growth. In fact, in last few years, if you see electronic manufacturing, that is one space where, India has achieved reasonable success. Uh, the EBITDA CAGR of some of the companies in this space in last 5 years has been around 48% average, which is like 4x of India's, EBITDA CAGR. So the point is that companies in this space will enjoy high growth, and they will enjoy high growth despite, whether India grows or not. Why? Because import substitution will drive that growth. Their top that kind of goods is already being consumed in India. It's just that they can start getting manufactured in India instead of being manufactured somewhere else. So that top line growth can be achieved by many companies. So I think companies in this space will enjoy high growth. They can enjoy high growth for a long period of time, and investors who are investing in this fund will get exposed to a lot of, I would say, young small ideas, mid-size, small-size ideas, which over a period of time can compound to become much larger. In this set, in manufacturing, India has not managed to create mega caps. Like for example, in financial services, we have mega caps. In IT services, we have mega caps. I think here mega caps are yet to happen, which means that you can participate in that opportunity. So I would say that growth is the most exciting part, and longevity of journey is the other exciting part. And third is diversity is the comforting part. That because the fund has a broad-based universe, fund manager can always move from one sector to other. So that's the, I would say, that diversity is the comforting part. So yeah.
Absolutely. This was very enlightening, sir. Thank you so much for your time. I hope you'll allow us more opportunities in future to learn from you.
Sure. Thank you.
Thank you. Thank you, sir.
Thank you.
Please note that mutual fund investments are subject to market risks. Read all scheme-related documents carefully.